So I've been trading for over 5 years now, and during that period, I've taken hundreds and hundreds of trades, most of which I journaled in this exact trading journal right here, or on my MacBook. And in today's video, I'm not only going to be sharing with you guys the 5 years worth of trading psychology experience and lessons that I've learned, but I'm also going to be giving you actionable steps that you can use to take away and exponentially increase your trading results and profits. Now, let's go ahead and get right into the video. Now, let's start off with what the trading industry typically recommends, right? So typically in the trading industry, you hear this sort of cliche of, you shouldn't have any emotions, you just need to be more disciplined, you need to be stoic, and all of these sorts of things, right? What I personally believe and what I've personally found, like I said, over the past 5 years of trading, is that this is probably the worst advice that anybody can ever give you. And why is that the case? Well, your priority shouldn't be to eliminate all of the emotions, because as humans, right, we have emotions. You can't get rid of them. You may be able to suppress them, but ultimately in some way, as psychology has shown over numerous studies and experiments, that repressed emotions will just manifest in some way or another, whether that be through irrational decision making or any other physical defects, right? And in the case of trading, what our priority should be is to prevent these emotions from getting in the way of executing our trading plan, as opposed to actually suppressing them and being more disciplined in general, right? And in any way, that is a very abstract saying, right? You need to be more disciplined. What does that actually mean? It doesn't really help us in any shape or form, right? Now, what I've personally found, and this is, like I said, over the past 5 years that I've been trading now, is it already comes down to two different emotions, and these two emotions have various different manifestations on the charts, and they can all be kind of categorized under these two emotions. So the first one that we're going to go through is actually this idea of greed. And greed can show itself and present itself in many different forms in trading. First of all, greed in trading is simply a desire to make money, which is actually holding you back. So that sounds counterintuitive, right? Your desire to make money is holding you back. Now, what I've personally found is that the need to make money is actually going to prevent you from making money. So this basically is going to manifest in trading in three main ways, and these can kind of be categorized under this same umbrella subject of greed, which is one of the main psychological problems that people have, right? So first of all, the main problem that a lot of people have when it comes to greed, and one of the problems linked to greed, is this idea of over leveraging. So over leveraging, I'm sure you guys know what it is. It's basically just a desire to flip an account, or in the case of prop firm trading, the desire to pass a challenge as quickly as possible, which ultimately leads people to blowing an account. I'm sure you've probably experienced this firsthand. I know I did at the start of my trading journey as well. You see all of these girls online with their Lamborghinis, their Rolexes, and all of these sorts of things, right? And you think that, I want that lifestyle too. I want a piece of that. But what this basically leads traders to do, it leads them down the wrong pathway of leveraging, over leveraging their accounts, trying to flip the account as fast as possible, because you see, not naming any names, but you see some online guru do 100 to 1 million online. Very falsified results that you're seeing in this trading space, just be aware of that. And because you see this, you think it's also possible for you. You open up a live brokerage account, you try to flip the account, and you just end up losing a ton of money. So the way around this problem is basically just an understanding that the only real way to consistently make money in trading is to focus on small, consistent gains over time. If you guys don't believe me, type up on ChatGPT after you've watched this video what a realistic return is for traders. And what you will find is that very few hedge funds even beat consistently over a long period of time 2 to 3% per month, risking 1% per trade. So what this basically means is that for us as traders, we need to understand that a realistic goal and expectation that we can have is to make around 2 to 3% per month. Obviously, day trading carries a lot more risk than investing, so we should definitely be rewarded for taking on that extra risk, and the expected return should be adjusted to account for that. So if we can make 2 to 3% per month, that is all we need, particularly in this day and age when we have the opportunity of prop firms, which I will go through in a moment. Now, the next problem that linked to greed, is very similar to the first, is overtrading. And this again stems from the same thing, is the desire to make a lot of money very quickly. And again, this is massively holding you back. Why? Because you think entering trades is going to make you more money. And one of the things that I always try to emphasize to the guys inside VIP, and a lot of people misunderstand this when I first mention it to them because they've been misled by certain figures in the trading industry and this sort of false this false representation of what trading actually is. And this problem is basically that making more trades is not going to make you more money. It's much better to focus on taking a few very high quality setups per week. Myself, for example, I take 1 to 2 trades per week, sometimes not even that. Sometimes I have entire weeks where I don't take any trades. And what I've personally found over the 5 years of trading experience that I have is that focusing on this quality over quantity is a massive game changer, and is ultimately what is going to lead you to reach that goal of consistent profitability and passing prop firm challenges and also keeping them and getting consistent payouts. So to the actionable step that I wanted to mention to get around this problem of over trading is really just to have a set rule in your trading plan, whether it be maximum 1 trade per day, or just like you have in a prop firm challenge, just set a maximum daily loss, and then no matter what, stick to this maximum daily loss and never go over it. It's very simple, but it can, like I said, exponentially increase your trading results. So understanding not entering more trades is going to make you more money is crucial, and having a set rule in place that prevents you from doing so is key in order to improve. Now, the third and final point linked to greed is holding positions for too long. And I'm sure a lot of you guys have experienced this, where, you know, you get kind of euphoric and really, really happy when the trade goes in your favor. Maybe it went 3% plus up. Now, what you think at this point is, you know, this trade can't possibly reverse. I can't possibly lose. I'm the best trader in the world. And all of these sorts of things, right? Your brain starts to get euphoric, and emotions kind of overcome that rational prefrontal cortex area of your brain, and the emotional, more antiquated part of your brain, the brainstem and amygdala, they take over. You start making all of these irrational decisions, such as holding the trade, convincing yourself that you're a god in trading, and all of these sorts of things, right? Now, what I've personally found, obviously I experienced this at the start of my trading experience as well, and what I've personally found is that the best way to solve this issue is really just to have a set mechanical TP rule, so that you know on every single trade you're always going to get out at this particular price level no matter what. So for myself, I'm mechanically going to target a 1 to 3 risk reward on every single trade. So this means that I can't possibly, you know, get greedy, because I have that set cutoff point where I'm taking my profit and leaving the charts. If you guys also make your trades break even and you employ an active management approach, then having a set break-even rule and partial taking system in place is also going to help you massively to get around this issue of greed, right? Now, I mentioned that there are 2 main emotions linked to trading psychology, and all psychological problems that you hear people talk about can essentially be categorized into these 2 types. Now, the second type that I wanted to go through, we've been through greed and all of its accompanying issues. The second type is actually this idea of fear. And a lot of problems in trading stem from this psychological problem of fear, which again is a completely logical and normal human emotion to experience. We can't suppress it no matter what we do. So how do we get around this on the charts, and how do we make money in spite of this problem, right? So fear is essentially quite self-explanatory, just being afraid to lose money, or also it can be the fear that you won't make money, right? Because being afraid to lose an amount of money is one thing, and then also having this fear that you're never going to make it or that you won't make money is also another accompanying problem, which again can be categorized into 4 kind of subtypes and under this one umbrella topic of fear. So going into the first problem linked to fear is this idea of FOMO, fear of missing out. And I'm sure a few of you have heard of this. It's a very cliche in the trading industry, but you basically are fearful that you've missed the best trade ever, the best trade of the century, and you're not gonna ever be able to find a trade this good again, and all of these sorts of things, right? And what this leads a lot of people to do, myself included in the past, is to irrationally enter into a trade. Maybe you have a written set of trading rules and a trading plan, but because you've maybe saw a trade, it's already got away from you, and you think, oh, I missed this perfect setup. So you jump into the trade, probably at a lower risk to reward in a place that doesn't really make any sense. Maybe now that you've entered higher up, your actual risk on that trade is no longer 1%, maybe it's now 3% because you've had a bigger stop loss size, and all of these sorts of things. But essentially, FOMO is massively detrimental to your trading results. And the real way to get around this, I've personally found, is just to have like a really clearly defined set of trading rules that you have back tested. If you have these very clear set of trading rules, it doesn't really make any sense to FOMO into positions, right? So for myself personally, I know that if I see this, this, and this, I'm going to enter the trade. And then if those confluences are not there, I'm not going to enter the trade, which basically makes it impossible for me to FOMO into a trade because it just wouldn't make any logical sense. I have the logical understanding in my mind that if I FOMO into a trade after it's already gotten away from my entry, it's going to completely ruin the risk to reward of the trade. And then if I take that and continue employing that habit over a sample of, let's say, 10 trades, I'm not going to be profitable. So it doesn't make sense for me to FOMO into trades just by having that understanding and clear-cut set of rules to follow. Now, the next problem linked to fear is fear of loss. And this is a massive problem and is one of the kind of core tenets of human psychology, which is that the brain is always trying to avoid loss. It's trying to protect us from pain. And this often manifests itself as an irrational fear, or some people term it loss aversion in psychology. It's basically just the kind of avoidance of loss, whatever that may be. And what this in trading leads us to do a lot of the times is, let's say we're in a trade and the trade goes into drawdown. This is going to lead us to do things such as, exit the trade early, even though it hasn't hit the stop loss, causing you to lose, maybe 0.5%, or and then eventually the trade goes to hit TP, but you exited it early because you were afraid of drawdown and seeing those negative numbers. It could also be, you kind of just seeing the trade go up in your favor, it pulls back to entry, you exit out of panic, but then the trade goes to TP. Or it could even be before you actually enter into the trade and it just causes you to hesitate and, be too afraid to actually execute on the trade. This is particularly a problem after you've had maybe 2 to 3 back-to-back losses, which, rationally, we know that that's an inherent part of trading and any trading system, but we still, when it comes down to it, we'll hesitate before taking a trade because our brain is telling us, we've lost 3 times in a row. What if we lose again? What if we lose again after that? And all of these sorts of things, and it's just a massive downward spiral and kind of negative feedback loop, right? The best way that I've personally found around this is just to have lots and lots of data and concrete evidence backing up and supporting your strategy via backtesting. So if you've backtested, 3 years worth of price action and you found and your statistics such that, maybe your maximum drawdown period is 4 trades in a row. This means that when you have a 4 trade losing streak, there's not really any reason to panic because you know that based on your backtested data, this happened before, but then ultimately over more and more trades, you eventually did hit that profit and became profitable anyway, regardless of that losing streak. So that's one thing I've personally found that has helped me massively, is just having a lot of data to back up the strategy and knowing your numbers as well, such as maximum loss streak and, all of these sorts of things, right? Now, very similarly linked to this is the fear of being wrong. And all this really boils down to is ego. When your ego comes into play, you're going to be more focused on being right than making money. And in trading, like I always tell the guys inside VIP, you can actually be wrong on a trade, but still make money. So let me explain. So let's imagine, for example, you're entering on an area of demand, right? Let's say the demand is here. Now, what traders typically would do, because of their ego telling them that they need to be right, they will think that they need to capitalize on the entire move back up to the previous high, right? But as traders, particularly with the style of trading that I teach, when we're executing on the lower time frames, you don't have to be right. You could literally just capitalize on a small reaction from that area of demand before price ultimately goes down. But because we're executing on lower time frames, we ultimately manage to execute at this level, capitalize on that small bounce, whether that be a 3-4% move, and then we're out of the trade, right? We've secured our profit. Now it doesn't really matter where price wants to head. If it wants to head down against our position, it doesn't matter because we've already locked in that profit. And in that sense, you don't actually need to be right about the overall higher time frame direction. You can just look to capitalize on these small reactions based on lower time frame executions. And that's one of the core principles that I like to teach. So the very simple actionable step you can use to get around this fear of being wrong is just to understand that you don't have to be right. So you can be wrong, still make money. It doesn't really matter if you're wrong or not. And then obviously at that point, the fear of being wrong kind of goes away because you understand that it's not an essential part of trading and you can still make money regardless of whether you are wrong or not. Now, the fourth and final part linked to fear, and the fourth and final sort of point that I wanted to mention in this video is having a lack of confidence in your overall system. Now, again, I think this mainly comes from, well, in principle, it comes from not knowing exactly when to enter and exit trades, and maybe because of that, you keep switching strategies. Maybe one strategy has a 3-trade losing streak. You think this strategy is worthless and it doesn't work, so you throw it out the window. Onto the next strategy. Again, this one has a losing streak. Maybe it works for a while, but then you ultimately hit that inevitable losing streak. You throw that one out the window, jump to the next ship. This kind of constant cycle of shiny object syndrome, bouncing from strategy to strategy. It's a very negative feedback loop, and it doesn't really end until you have the understanding that it's not necessarily about the strategy, it's about whether you can stick to it and about mastering your own trading psychology. But going back to this point of a lack of confidence, I think this mainly stems from, again, not having a clear-cut set of rules that you've back-tested and collected data on. Because if you have 5 years worth of back-tested data on your system, like I have, then, even if you do hit that losing streak, there's no reason to lose confidence in your system because you've proven to yourself through diligent back-testing and data collection that overall, over a sample of trades, that your system does work, and that gives you a massive amount of confidence to consistently execute this system, right? I think it also helps to, have that strategy in place to begin with. Which, if you guys haven't seen any of my previous videos, I would recommend watching some of the previous strategy videos on my channel. I go through an entire rule set, give you away the free trading plan and all of this sort of stuff. And like I said, this is the strategy that I've personally back tested over around 5 years worth of data. So having that a system like that in place is going to be a massive confidence booster that you guys need in order to consistently execute a strategy day in and day out, regardless of whether it's on a winning or losing streak, right? So I've already kind of walked through this, but essentially in order to improve your trading psychology, I have consolidated this entire video into essentially 4 points, which you guys can take away and massively use to improve your trading results and trading profits, right? So the first one is just have a written and back-tested trading plan, and you need both of these. So ideally it's written down in front of you so that every time you come to the charts to trade, you know that exactly what you're looking for. You know that if this, and this happens, you're going to execute the trade, and if not, you're not going to execute the trade. But also it's essential to have it back-tested and data on this exact system, because if you don't have that, you're not going to have confidence in the system. You're not going to be able to consistently execute it. So having back-tested data is fundamental to reaching that consistent profitability stage and, having confidence in your system. Now, second of all, this is going to get around the fear of losing and all of the sort of fears associated with that, which is to have a predefined risk amount before you execute any trade. And ideally, obviously, depending on your personal trading psychology, whether you want to have this or not, I would also include a rule for making the trade break even, because once your trade is break even, right, and you know that worst case scenario, you lose no money, and then best case scenario, you make money, the whole psychology and approach that you're taking is just completely different, right? Because you know that there's no chance that you're going to lose money. The fear of loss is no longer there. You're able to think in a more clear and rational state of mind. So just having this predefined risk and rule for break even will help massively with all of the problems associated with fear. Now, number 3, like with prop firms, we can really learn a lot from the prop firm rules here. I would set a maximum daily loss and maximum number of trades that you take in a day. For myself, this is 1 trade in a day, 1% loss, because I risk 1% on every single trade. Because what I've personally found is that, and I think this applies to pretty much everybody unless you're some, psychological anomaly. Most people, after they've lost 1 trade, they are no longer able to think rationally and logically. So the next trade that they enter, there is a very, very high probability that it will also be a loss if the first trade that they took was a loss. Or even if the first trade they took was a win, the second one is also very likely to be a loss, because it's probably stemming from not your trading plan itself, but it's probably coming from a place of, like thinking you're some sort of trading god. You won before, so how could you lose again, right? And that's kind of why I would set a maximum daily loss and max number of trades. But again, massive game changer if you guys want to walk away and apply this. Now, 4th and finally, the final point I wanted to make is just to develop discipline in other areas of life, right? You can't be an undisciplined person in terms of the gym, in terms of diet, in terms of studying, in terms of anything else in life, and then simultaneously be a disciplined trader, right? You have to be a disciplined person, full stop, and then that is going to transfer over into your trading, and it's going to make it a lot easier to follow your trading plan, follow your trading rules, stick to your maximum daily loss, stick to the predefined risk amount that you set for yourself, and ultimately just follow that trading strategy which you have back tested, right? Even when things are going wrong, even when you're on a losing streak. So what I've personally done over the past 5 years in order to develop and cultivate this discipline is go to the gym consistently 5 times a week. Or if you don't like going to the gym, just go on runs, or set a goal for the number of steps that you want to do today if you prefer walking or anything like that. And eating a diet consistent mainly of whole foods. Obviously sometimes you can have the foods that you want to eat, but 90% of the time stick to whole foods. This is going to give you a lot more mental clarity, and also it's just going to cultivate that discipline that you need in order to succeed in trading. So don't underestimate this last point. It doesn't, it's not like obviously linked to trading, but believe me, it does tie in massively with becoming profitable and, making money consistently with trading. Now guys, I'll be completely honest, but trading psychology is only half of what it takes to become a profitable trader. The other half is obviously having a clear-cut and well-defined set of trading rules and a strategy that has a proven and profitable edge over a large sample of trades. Now, I've already gone ahead and back-tested my personal system over hours and hours of past videos. So if you guys want to see the full breakdown of the strategy that I use, as well as hours and hours of backtesting sessions on this system, I'd recommend watching this video next first of all, and then also any of the other backtesting videos on this channel as well. But that is it for today's video, guys. I hope you enjoyed. Make sure to like and subscribe, and I will see you in the next one.